Hi, today I would like to show you a follow-up part 2 video, master the demand and supply zones in stocks, Forex and indices. In my last video on this topic, I talked about where you should mark out the major weekly demand and supply zones, value zones. One of my dear followers and subscribers asked me recently, I hope you see this now, to make a video about demand and supply zones at a lower time frame than the weekly time frame. So here I am. In part 1 video about value zones, as I spoke of before, I showed these value zones and I said that the stock Apple and the EUStocks50-index and the currency pair US dollar versus pound, these three assets should respect my value zones and make a trend reversals at these value zones. But remember that these value zones are not bad if the rate or price should slightly pass or cross these value zones boxes I showed you. The important factor is to notice the price action in these value zones boxes and study how supply and demand may look and influence candlestick bars when these assets prices goes back into the box for a trend reversal or that the price hits these value zones in a pullback retracement in a trend continuation, also with a lower time frame than the weekly chart I showed last time in part 1 video about my value zones. Important for you to know is that trustworthy demand and supply zones will decrease using lower time frames than weekly and daily charts. Using 1 hour chart or lower such as scalping strategy, demand and supply zones are weak. Remember, big players, banks and large institutions never trade with lower time frame than weekly and daily chart. They are only looking for large value zones and stay put in the trade for several days or weeks. Regarding Forex trading, there are often manipulative price movements from large institutions that want to take your money from the market by hitting your stop loss and thus using your money loss to their advantage. Large trading institutions need more liquidity for the large purchases of certain assets such as currencies, commodities, or purchase of shares, stocks. That is why they need to stop your trading out, hunting after your stop loss levels. Your loss is their new liquidity for their trading success. Okay, let's have a look what has happened since the first part 1 video, if my value zones were correct. In part 1 video, I showed 3 assets. If they will respect my value zones and not pass through them. Let's check it out now what happened with these 3 assets. EU, European Union Stocks 50 Index, the 50 largest companies in the European Union, stock Apple Incorporated, and the currency pair British pounds versus US dollar. So if we start with the European Stocks 50 index, so you can see that, or if you remember from my last video, that this gray rectangular boxes are value zones or demand and supply zones. And my technique here was to use the the weekly wicks here, you can see this is a bullish pin bar, and you can see the wick here, which tells you that the buyer is stepping in fast, and you can see the trend. Each of these candlestick bars represents 1 week, and the weekly time frame is best to pinpoint these large value zones that banks and large institutions are using. You can see here that last time we were something about here, and I draw this value box here, and we can see that the price of the 50 largest companies in the European Union, those stocks exactly rejected when it touches my box here. So I can show you on a daily time frame. Here it is. It touches my value zone and has went down now for 1 to 3 days. This is 4-hour time chart. So now I think it will get up to this level, or a double top to retest this box again. And I'm using exponential moving averages, EMAs. This is 21, this is 50, and this orange one is 100 EMA. I have found out that this is very good trend following if you're using for a 4-hour chart. And you can see here no breakout on the downside so far below this 100 EMA 4-hour chart. So let's go further to the second asset I talked about last time, and that was the stock Apple Incorporated. And you can see once more that my value box here, I wrote it, or I draw it from this wick, upper wick here, you can see here. And this is also a weekly chart. And you can see that the price went into the box here, halfway into the box. And then the seller stepped in very fast. And now we can see a weekly shooting star here with a large upper wick, which is very bearish. And you can see what happened here this week. It went down for 1, 2, 3, 4, 5, 6, 7 weeks down here, just cashing in the profits. Then we had a retest up into the box, up on the roof here in the box 2 times, and then went down. Let's have a look on the daily time frame here. Oh, this looks fantastic. What I see at this very moment, that we have this shooting star or bearish pin bar here, a hammer. And this is actually an inside bar now. This is a mother bar. Why? Because the second day here is a small candlestick bars. The price has never gone below this level and never gone above this level. So this is totally engulfed with the mother bar here. Therefore, we have an inside bar strategy. The second candlestick bar here, as you can see now in present time, has gone below this level. So if I you should always do like this when you're trading with inside bar strategy, so you can easier see here. Okay, I don't, you can put a horizontal line here as well, but okay, you don't have to do it right now. You can see here that we have a price that is below now than this level, the lowest point of this mother bar, lowest point of this bearish candlestick bar. And if we have a close, New York close here, below this line, the price will either go in two directions, most likely. Either we have a pullback retracement, retesting the box here, which I think at this very moment, so I have put 40 stocks contracts here, short selling, if the price tomorrow retest here. But I will wait for tomorrow and look at 4-hour chart and 1-hour chart to have a greater accuracy if I should lower this and take my entry perhaps at this level. And let's go further with the third asset, which is the pound versus the US dollar currency pair. And this third one was the only one of these three that didn't respect the value zone. I will enhance it. You could see how huge downtrend it has been. So this broad area here, it's a weekly value zone. And I must show you the technique here where you shall use a lot of technical analysis for confluence for a good trade. So you can see here that I draw this due to the fact of this weekly pin bar here, the wick, and you see here what a strong one and went up for several weeks. So of course this is a broad one, is huge, but it's always good to have this broad ones as well as this one and this one, because most often price doesn't respect very thin value zones. So you must see the whole picture, and when the price get into the boxes here, or touches like here, then you are using smaller, lower time frames such as daily, 4-hour and 1-hour time chart to get an exactly entrance using price action, candlestick bars, knowing where you should do your entry. But first of all, you have to wait, preferably that the price touches the boxes here. In that case, if you have this patience, you will trade with the smart money. You will trade with large institutions with billions of dollars, and you will be a winner on a long run. Often retail sellers and amateur traders, they don't get patient enough to get a lot of money. That's actually the most important factor and knowledge and truth I can tell you. If you got patience, you will get much money from trading. Patience is everything. It means everything when it comes to trading. So you can act like what can I say, like a crocodile who's waiting for its prey for days, just waiting for the largest, juiciest animal to eat. And trading is exactly the same. If you got patience and waiting for the best trades, like this one, up to touch these levels, you got huge profits here, huge profits. And secondly, you don't have to work much. So, okay, you see, we have a weekly zone here. The price went down here. It's this week today. Totally went through. And when you see this, next step is to do the same, to look for value zones on daily chart. So now I'm using the daily chart. And here is the weekly one I just talked about. So here I have drawn a daily value zone from this week here. And you can see the price somewhat respected it here, and more like here, resistance and support. But here we can see that the pound dollar didn't respect the weekly zone, didn't respect the daily value zone. But here's something interesting to see. Here we can see that the price didn't go further than halfway in this daily value box. Here you can see the wick. And you can also see this, this is a huge major support and resistance level. So when you're using value zones, you shall always also in combination use resistance and support levels as well. Okay, I have to change to weekly. Here it is. So you can see that we are here now. We have a minor rejection here so far, and because of this one, this resistance level, which is a demand level, you can see where the price went up from this demand level, and this was oh wow, year 2016 in October. This was 6 years ago. So you can see now what I'm talking about regarding patience. If you have your value zones and this support and resistance levels, let them be. Several years later, they will get valued. They can help you in present time. And you can also see here that we also have a wick here. So who knows, tomorrow the pound dollar pair might touch this level, a double bottom, which is very bullish. Double bottoms and double tops are very strong bullish and bearish structure. You can see here is a double top, 1, 2 on the same level, and you can see what happened. Here also a double top. So it's very common. Here you have a double bottom, 1 touch, 2. Here it's all the time double tops and double bottoms, so remember that. And for one of my viewers and subscribers that asked me to show how I draw these value zones, demand supply zones in lower time frames, is it's not that much big difference actually. Because you can see here This is the weekly chart when I draw this value zone. And now when we have the daily chart, you can see there's no difference. It touches exactly here, even if you're using the daily. You can say like this, that if you're using the weekly time frame, it's easier for you, it gets much faster for you to draw value zones. If you're using the daily chart, you need to look, it's more difficult to find the wicks. And here, if you should use this daily wick here for a value zone from here to here, sure, it would work here. Yeah, the price went in to the top of this pin bar here. But you can never be certain that the price will reject exactly here on this floor on the box. The price could also go in half in the box here and then down. So therefore, using weekly value zones from weekly wicks and tails, that will give you the flexibility to get more trades, because all trades, it's not perfect that it exactly touches the box like this. Most often it goes in halfways like this, or hit the top of the box up here and then down. So if you're using the weekly wicks, you get lots of more entries, lots of more accurate entries, and that gives you more money in the long run. Okay, so let's see how a 4-hour chart looks like. Okay, we are back now. This is present time. You can see this is 4-hour rejection from this level that I was talking about. That was from year 2016, 6 years ago. It works so far. And the price actually moves a lot fast here now. Let's see on 1-hour chart. I think this is the very bottom here. It looks like that. So, how to draw value zones from lower time frames? Yes, here for instance, we could draw value zones from this minor upper wick here, like this. I do like this so you can see it easier. Okay, this was close. When you see the price, my God, it's so close, this floor of the value zone. Always use lower time frames like 1 hour and so on. I often, if I see that this is very high level, perhaps month back when we was so high, or years, I take the trend, I take the entry, sell entry blindly. I'm not looking for any candlestick bars that shows me that it could be a high supply situation where there's no buyers, because it's very seldom that the price really shoots high when it's very high levels from a weekly time frame. So that's the advantage if you're using your first analysis with your coming weekly trading, using weekly time frames, because you will get more safe stop losses. And if you are using lots of trading strategies from weekly time frame, and you put your support and resistance levels, you draw your value zones from weekly chart, you will less get stopped out from big institutions when they're seeking for liquidity on the market. If you do your analysis from weekly charts, you will not that often get stopped out. You will less often lose your money in your trades. And if you're losing half of your money in all trades you do, that will affect your trading account big time, trust me. You make better trades, more winners, more profits gains, and less losses. Let's see here if we can using this 4-hour chart for trend continuation. Yes, we have one here. You see this 4-hour chart here. This one. Or you can use this one as well, but it's better to use this one that is higher point. So if you draw a value zone with this wick on 4-hour chart here, all the way, okay, this is already drawn here from the weekly, but we see here the line here. Yes, you can see here, your sell entry will work. So when you're trading this, perhaps short selling, and you take a profit somewhere here, then you start thinking, where shall I short this pound-dollar pair again? Well, then you're using this value zone from this wick, and you can see here, you get in. Also, you can see here, this is a very good example. If you're just using this large weekly value zone, you can see it works again. This is the roof of this weekly value zone. And you can see the price hits here, okay, a little bit above, but the world is not perfect. So even though that you're using the weekly or daily or 4-hour time frame, it works. And see if we have, let's say if you have a short selling here, where is the demand zone on 4-hour chart? Here you can see we have the first one, right? We have a range trading here. It's an equal struggle between buyers and sellers here. So this is a minor support level that could work here, right? It's not a supply and demand zone in this case, but it's a resistance level here. It respects this. So you also use, as I was mentioning, both value zones and support resistance levels. So in this case, the 4-hour chart, the price went almost halfway into this weekly value zone, and exactly the price didn't go through on the downside from this major support level 6 years back. Okay, I tend to talk too much, sorry for that. I think this is all I have to say right now. And I hope you have enjoyed this video, and I will actually start going live soon so I can interact with my subscribers, so we can have an open chat dialogue where you can ask me in real time any questions you want about price action trading in commodities or shares or Forex trading. It doesn't care. It doesn't matter. I mean, I'm trading with all of assets that exist in the world. So I'm familiar with all of them. So I can answer all of your questions, hopefully in a clear way. Okay, traders, take care of you, and I hope we will see you soon here. Thank you. Bye. Bye for now.